Mortgage rates took a hit on Friday, thanks to a strong jobs report, but it's probably not as real as it seemed. Bonds got beat up, but we're seeing a little bounce this morning. They're up 16 basis points. The market seems to be questioning some of those jobs numbers, which is a good sign, but we need to be cautious because we have some inflation data that could shake things up again. On Wednesday, we get the CPI report. That's the big one. That's the one that will show us where inflation was in May, which is when tariffs kicked in. That could mean higher prices and more pressure on mortgage bonds. Now, last month's CPI report looked okay, but that was for April. The problem is May gets compared to May of 2024, and that number was really low. So even if our numbers come out okay, it still is going to probably show us inflation rising year over year. Core CPI is also going to be tricky because the majority of that report is based on shelter. And a lot of that information comes from surveys asking homeowners what they think they could rent their house for. And as you can imagine, it usually gets overstated. Even with that, if inflation numbers stay tame, the market could overlook the year-over-year bump, which would be really helpful for rates. So today, I would have a little bit of optimism, but I would stay on the defense. If you're considering locking, I would be locking my rate in. We got to be careful because the CPI report and the PPI report could bring bad news. Do me a favor, like, follow, and share my videos with a friend.